Hello, everyone. Moe Zulfiqar here with another episode of 5 Minute Show, where I try to break down investing, economics, or business concepts in 5 minutes or less. No fluff, no jargons. Today, I'm going to talk about silver and why it's possible silver can go to $91 per ounce. I know it sounds crazy, but to understand this, you got to look at gold to silver ratio. Now, let's dig in details. In simple terms, gold to silver ratio tells you how many ounces of silver it takes to buy an ounce of gold. Very simple idea, but it is a powerful indicator. You see, gold and silver tend to move together, not perfectly, but close enough that this ratio becomes a great way to see one metal is cheap or expensive relative to the other. Right now, the gold to silver ratio stands at 81, meaning it takes 81 ounces of silver to buy 1 ounce of gold. Historically speaking, that's a relatively high, and when we hit these levels, big moves in silver tend to follow. If you zoom out and look at decades of data, there are two numbers on this ratio that you should pay very close attention to. One is 80 and second is 45. Every time this ratio goes above 80, eventually, sometimes slowly, sometimes very sharply, it heads down towards 45. In 2011, it just didn't reach 45. It actually dipped below 45 and went much lower. Make no mistake, these aren't random moves. They're part of a long-term pattern that has repeated over and over again. Now, the big question is, will it be different this time around? You see, there are two ways the ratio can actually drop to 45. One scenario is gold stays at the current levels and silver price surges. You get to 45. But the other scenario is that gold tumbles and silver falls with it, and you can get to 45 very easily. If you talk basic math, both of these scenarios are possible. And when I talk about $91 silver price, I am referring to the bullish version of this scenario, the one where silver catches up to a strong gold price. Now, let's just do simple math. If ratio drops to 45 and gold remains at around $4,100, then you get to silver prices around $91 an ounce. And I know this number sounds wild, but it's not hype. It's just a math behind a pattern, again, that has been in play for decades at this point. Remember, silver isn't just the poor man's gold. It's also got some major industrial use. It's used in solar panels, electronics, EVs, batteries, medical devices, and a lot more other places. A jump to $91 an ounce would put real pressure on these industries. So while, the $91 an ounce potential move is great for investors, but the real economy may not love that price. Still, the ratio is flashing the same signal it has flashed before silver prices move big time. So I will end with this. Is $91 an ounce silver guaranteed? Not at all. Is it possible? This ratio says it is. If you like this breakdown, hit the like button, subscribe, and check out zulfiqarresearch.com for no nonsense, clear market insights. See you in the next episode.